Bitcoin has become the financial story of 2025, dominating headlines and boardroom conversations worldwide. Its influence is undeniable, permeating every corner of the financial world. No longer a niche asset, its price, now around $118,800, has shattered records and drawn in global banks, corporations, and everyday investors. The surge has been nothing short of phenomenal. The focus isn't just on price, but on what Bitcoin represents: a hedge against inflation, a digital gold, and a revolutionary shift in how we perceive value. It's a challenge to traditional finance, shaking the very foundations of established financial systems and prompting a re-evaluation of monetary policies. Its meteoric rise has validated long-term believers and lured new capital, transforming the financial landscape. Investors are now more optimistic than ever. Every price swing is now a test of legitimacy, with institutions and governments taking firm positions. The stakes have never been higher. The world is watching to see if Bitcoin will reach the $200,000 milestone, a barometer for the future of digital assets. This milestone could redefine the market. Understanding Bitcoin in 2025 means grasping the powerful forces at play: new financial products, corporate adoption, and rapidly evolving regulations. The landscape is changing rapidly. The answer to Bitcoin's future will be written in the market's movements in the months ahead. The journey is just beginning, and the world is watching closely. Bitcoin's recent surge has cemented its status as a major financial asset. On July 14, 2025, it hit an all-time high of $122,000, after months of steady buying and growing confidence. Since then, the price has consolidated, trading between $116,000 and $119,000 as the market pauses to reassess. The $120,000 level is a key resistance. Breaking above could trigger another rally. Support sits at $112,000 and crucially $100,000, levels watched closely by traders. This tug-of-war between optimism and caution is fueled by institutional adoption and regulatory progress, but also by fears of a correction after such rapid gains. The current consolidation is a period of price discovery, setting the stage for the next big move. Whether Bitcoin breaks resistance or tests support will define the rest of the year. The outcome will signal if those ambitious price targets are within reach. Expert forecasts for Bitcoin in 2025 are bold and varied, but optimism prevails. Analysts and financial experts are diving deep into data, trying to predict the future of this digital asset. Most analysts expect the upward trend to continue, with average predictions ranging from $115,000 to $145,000. This optimism is fueled by increasing adoption and the growing acceptance of Bitcoin as a legitimate asset class. Bullish institutions like Standard Chartered and Bitwise see $200,000 as possible, citing surging demand from new investment products. They believe that as more financial instruments are built around Bitcoin, its value will soar. Some, like Tom Lee and Martin Froehler, predict peaks as high as $250,000, driven by institutional money and Bitcoin's fixed supply. They argue that the scarcity of Bitcoin, combined with increasing demand, will drive prices to new heights. Not all are convinced. Cautious voices warn of volatility, with potential lows between $70,000 and $88,000. These analysts point to historical price swings and market unpredictability as reasons for their caution. Skeptics like John Hawkins argue Bitcoin is a speculative bubble, vulnerable to sharp corrections. They caution that the rapid price increases could lead to equally rapid declines. Looking to 2026, bullish analysts see the adoption cycle pushing forecasts to $214,000 or higher. They believe that as more people and institutions adopt Bitcoin, its value will continue to rise. These predictions hinge on deepening institutional involvement and Bitcoin's scarcity. The limited supply of Bitcoin is a key factor in its potential price increase. While the numbers seem lofty, they're rooted in the same supply-demand logic that's fueled Bitcoin's rise. The basic economic principle of limited supply and increasing demand continues to drive the price. As more want a piece of a limited pie, the price of each slice climbs. This fundamental concept of scarcity and demand is what many believe will keep pushing Bitcoin's value higher. The launch of spot Bitcoin ETFs in the US has been the main driver of Bitcoin's explosive growth in 2025. This historic move marked a turning point for the cryptocurrency market, opening the doors for a new wave of mainstream adoption and investment. For years, investors had been waiting for a regulated, accessible way to gain exposure to Bitcoin, and the arrival of these ETFs finally made that possible. These ETFs, approved in January 2024, have made Bitcoin accessible to everyone with a brokerage account, unleashing a flood of new capital. Now, both seasoned investors and everyday people can buy and sell Bitcoin as easily as any stock or mutual fund, all within their existing financial platforms. This ease of access has dramatically broadened Bitcoin's investor base. In 2025 alone, ETFs attracted over $15 billion in net inflows, with total holdings now at $150 billion. This surge in investment is unprecedented for any asset class in such a short period, highlighting the immense appetite for Bitcoin exposure among both retail and institutional investors. Major hedge funds and asset managers like BlackRock have joined in, signaling Bitcoin's legitimacy to the broader market. Their participation has reassured many skeptics, and their influence is encouraging other financial giants to consider Bitcoin as a serious asset class. Corporations are also buying in. MicroStrategy now holds nearly 600,000 BTC, and others are following suit, viewing Bitcoin as a superior store of value. This corporate adoption is creating a ripple effect as more companies look to diversify their treasuries and hedge against inflation. This institutional and corporate demand is colliding with Bitcoin's fixed supply of 21 million coins. Unlike traditional assets, Bitcoin's scarcity is hard-coded, making it immune to inflationary pressures and government intervention. Nearly 70% of all Bitcoin hasn't moved in over a year, creating a powerful supply squeeze. Long-term holders are refusing to sell, further tightening the available supply and amplifying the effects of new demand. With limited coins available and demand surging, upward price pressure is inevitable. Every new dollar chasing Bitcoin is competing for fewer and fewer coins, driving prices higher and attracting even more attention. The basic economics of scarcity and demand are now playing out on a global stage, as investors and institutions worldwide recognize Bitcoin's unique value proposition and its potential to reshape the financial landscape. Regulatory clarity has transformed Bitcoin's outlook, especially in the US, where a pro-crypto administration and new laws have boosted institutional confidence. The Genius Act and FIT21 bill are creating a predictable framework, reducing the risk of sudden crackdowns. Europe's MiCA regulation, effective since January 2025, unifies crypto rules across the EU, boosting confidence but raising compliance costs. Asia is also moving fast. Hong Kong approved spot Bitcoin and Ethereum ETFs, and South Korea enacted new crypto protection laws. The global trend is clear. Major economies are moving toward formal regulation, signaling the industry's maturation. This shift is creating a more stable environment for Bitcoin's long-term growth. Regulatory certainty is unlocking the next wave of institutional capital. Despite the optimism, Bitcoin's path to $200,000 is fraught with risk. Macroeconomic threats loom. If inflation persists, higher interest rates could draw capital away from Bitcoin. Regulatory risk remains, with the possibility of sudden crackdowns or policy reversals in major economies. Even well-meaning regulations can spook the market if they threaten core crypto principles. Volatility is ever present. Sharp corrections of 30 to 40% are common and can trigger panic selling among new investors. Technological threats like quantum computing could undermine Bitcoin's security, though solutions are being developed. A breakthrough in quantum tech could spark existential fears and a massive sell-off. The market's resilience will be tested by these challenges. Investors must remain vigilant as the landscape evolves. Investor sentiment in July 2025 is overwhelmingly bullish. A recent survey shows 61% of experts recommend buying Bitcoin at current levels, seeing more upside ahead. Another 26% advise holding, expecting long-term gains despite possible short-term volatility. Only 13% recommend selling, citing rapid price appreciation and risk of a pullback. This lopsided sentiment marks a dramatic shift from previous years, highlighting market strength. Over half of experts believe Bitcoin is still underpriced, even after its historic rally. The belief in continued institutional inflows and supply scarcity is fueling demand. This widespread optimism could propel Bitcoin even higher. Bitcoin's rise is part of a broader digital asset boom, with total crypto market cap now at $4 trillion. While Bitcoin remains dominant, its share has dipped to 48.9% as Ethereum and other altcoins gain ground. This shift signals a maturing market with investors diversifying beyond Bitcoin. The growth of altcoins fosters innovation and strengthens the entire ecosystem. The 2024 halving and the approval of spot ETFs have created a unique supply-demand dynamic. Unlike past cycles driven by retail investors, today's demand comes from the world's largest institutions. This institutional foundation is making Bitcoin a recognized part of global portfolios. Bitcoin is evolving from a speculative asset to a core component of the financial system. Its role in diversified portfolios could have lasting implications for its value. As 2025 unfolds, Bitcoin's future is shaped by immense potential and real uncertainty. The bullish case is strong ETF inflows, corporate adoption, and fixed supply create powerful upward pressure. But risks remain. Macroeconomic shocks, regulatory changes, and volatility could derail momentum. The most important signpost is continued ETF inflows, a transparent indicator of demand. Legislative progress in major economies will unlock further institutional capital. Bitcoin has cemented its place as a revolutionary asset class. The journey to $200,000 will be volatile, shaped by global events and market psychology. With the world watching, Bitcoin stands at a pivotal moment. Its next chapter is about to be written.